Hey, big warm welcome out there, ladies and gents. It's almost noontime here, Eastern. It's a Wednesday. Not technically a wacky Wednesday, but boy, it feels pretty wacky right now. End of the month. We just finished up our last day of trading here for the month of February, and boy, did we get started with a bang. Want to remind you guys here before we get started, this material is for educational purposes only. Please be careful with your risk capital. There is risk out there in these markets, guys. So just please remember, guys, speak to somebody you trust regarding risk capital. Educational purposes only. I want everyone to be trading responsibly out there every day. All right. Now, we made a bunch of cash today. We made it look pretty darn easy out there, didn't we? But there is risk out there in those markets. We train our members every day on managing their trades, managing their accounts, managing their risk, managing their emotions. And don't forget, we got some end of the month discounts right now, last day of the month. And it's a training day, so don't delay, guys. Get involved with us. Sales at School of Trade. Get you guys into our private training this morning. Now, crazy day. We've had an incredible week here. Big day Monday, bigger day Tuesday, even bigger day on Wednesday. And we ultimately did the same thing today as we did Monday and Tuesday. We came in early, we planned our trades, and we traded our plan. What was the first thing we knew this morning? We had the news. Regarding the news today, the news was a little bit tricky. First of all, we had 8:30 GDP. We didn't expect to see much at 8:30, did we, guys? We talked about this. GDP is one of those events that it's all show and no go. The GDP, because so many traders are watching, the GDP, unless it comes out dramatically higher or dramatically lower than expected, we don't get much movement from the GDP. In fact, most of the time, the markets have already priced it in. So normally we'll expect some slop and chop around that GDP. So we knew at 8:30 we had some news, but we weren't quite sure if we'd get any opportunities from it. We then moved through 9:30, and we knew that from 9:30 until, possibly 10:30, we may have some trouble because we had 9:30 open, which then bleeds right into the Chicago PMI, which bleeds right into Ben Bernanke's testimony, which then would lead right into 10:15 for the crude oil inventories. So we had reason to believe that we weren't going to get much until after 10:30, and boy, were we right about that. In hindsight, we were definitely right about that. We didn't really know it ahead of time, though, obviously. Now, the biggest concern was that 10 o'clock, we'd have analysis paralysis as everyone kind of took a little lunch break or coffee break and listened to Ben Bernanke. And that's exactly what happened. And then we also knew inventories on crude at 10:30 would also be very difficult if we didn't really get movement between 10 and 10:15. So we were prepared to be slopping around early, have a small window after 8:30 till 9:45, and then be ready for 9:45 to 10:30 be sloppy. And then here was where the variable comes in. The variable really came in, how are we going to react ahead of the beige book? The beige book, again, we talked about this at 7:30 in the morning. You can go back to the morning prep. It's typed up there too. Beige book, any news we have in the afternoon, any news, whether it be early afternoon the same day or major news the following day. Now, tomorrow we have jobless claims. That's not going to be the major news. If we had non-farm payrolls, right, if we had something that was really big and important the following Friday morning or the following Thursday morning, then we would treat it the same way. Bottom line is, beige book told us, be ready for this thing to slow down early. So we knew chop and slop early. Okay, get the trade between 8:30 and 9:45 because then it might be sloppy and choppy again, and then we didn't know what to expect afterwards. First couple clues we got today were the overall news. We knew to get in early and get out early today. The next clue we got was the dollar. Now, I'm not going to go grab a live chart because you know me, I'm not a big fan of hindsight. Why don't we go back and look at what the dollar morning prep said? Here was the dollar at 7:30 this morning. And guys, this is the confidence that I get when I trade my plan. Here's what I always tell a new client. The only way that I can feel confident that I can replicate positive results and avoid negative results one day to the next. See, when I was a new trader, I would have big winning days, but I couldn't figure out how to replicate it. I had gotten lucky. Okay? I had really bad days. I couldn't figure out how to avoid that. One thing that planning your trades and then trading your plan every day with consistency. Remember, every day, not every other day, not when you feel like it, right? Not when your best friend's not using his trading plan. Trade the same plan every day. When I come in and plan my trades and then trade my plan, when I see profit because of that, my subconscious, the stuff that I can't control, now kicks into gear and says, wow, Joe, see what happens when you just trade your plan? Why wouldn't I keep trading my plan? And so your mind begins to believe if you just simply come in, plan your trades, be patient for price to come to you, and then follow your plan, you will be successful. Not every trade will be a winner. And yeah, you're going to have losing days. But in the long run, you'll make more money than you lose. And that's the name of the game. So again, what makes me very confident is when I look back at this. And the reason why I do this at the end of my day is because it's fresh in my mind. I'm looking at the man in the mirror right now. Okay? I'm the only person that made this plan. I'm the only person that executed this plan. I want to review my trades because now I have to look myself right in the mirror and say, did I do the right thing today? And hindsight is 20/20, so go back to the beginning. What do we see? First things first on the dollar. 2 big clues. First clue, narrow range, sideways range, no trend. And this should be no surprise to you guys here. We've been talking about this all morning. Okay, that was on our radar. That was on our morning prep at 7:30. No trend, narrow range. Right away, that tells me fake out, breakout market. An even bigger clue, price wedge. Guys, how many times have we discussed the market personality that comes with the wedge? And what market is the granddaddy of all wedges? It's the dollar. If the dollar's not moving, nothing else moves. If the dollar's wedging, everything else wedges. Dollar's trending, everything else trends. So, second clue in the dollar, price wedge. First clue, narrow sideways range, no trend. Second clue, price wedge, market personality. So what does no trend mean? No trend means no directional bias. Price wedge, market personality. What's the market personality? Fade the breakouts, fake out breakouts. This should sound like a broken record at this point this week. Monday and Tuesday were the exact same plan. So first clue said, no directional bias. Buy the lows, sell the highs. Second clue tells me, fake out breakouts. Market personality says, fade the highs, buy the lows, fade the breakouts. So my plan was to fade the breakouts right from the beginning. Let's now go back and see what our trades look today. We had a pretty disappointing day. I mean, we only made 200 ticks, 240 ticks. It's a tough gig to be a day trader sometimes. I'm obviously kidding. What a great day. Began our day today trading on the 8 range on Crude.